Welcome back. Well, for more on the potential impact to the Canadian economy of simultaneous labor outages at both Canadian Pacific Kansas City and Canadian National Railway, the two large railways in this country, we're joined now by Dennis Darby, President and Chief Executive Officer of the Canadian Manufacturers and Exporters. Dennis, thanks a lot for joining us. The latest that we've heard on this is that the federal labor minister, Stephen McKinnon, is insisting and has insisted more than once that the respective parties, the two companies and the union, get together, do the hard work of finding agreement and sort this thing out on their own. I believe the position of your group is that we're beyond the stage now where that's a realistic strategy. Is that correct?
First of all, given all the headwinds we faced as an industry, as an economy over the last 5 years, from the pandemic to port disruptions to supply chain disruption, this is one we don't need. This is a disruption that will have huge impact on the economy, and we think the government needs to use its powers to force the parties back to the table and prevent a work stoppage, because they've already started to pull things off the system. This is a real catastrophic event for the economy, and certainly for our manufacturing and exporting sector, which is still coming back slowly post-pandemic. So I think it's time for the government to intervene, and we've said that very clearly.
Summarize for us who you represent and what are they telling you when you talk to them about how their businesses would be affected by a labor outage here?
Yeah, manufacturers and exporters, we represent the broad manufacturing and exporting sector across Canada in every industry, from food to petroleum to minerals to automotive parts and pharmaceuticals. So we represent that broad base of manufacturers. Every day, about $500 million worth of manufactured goods are on our rail system. So that's the scope of the problem, the size of the issue if we're shut down and that is disrupted. So that's a huge impact. And when we talk to members across Canada, they estimated it cost each of them about $275,000 a day, and that comes from penalties, late delivery, having to look for alternative transportation, which are very, very, very difficult to find those modes, and potential inefficiencies. And of course, because many of them sell to the U.S., the U.S. is not necessarily going to be very happy saying, well, it's okay. They're going to pay penalties to the suppliers and their customers. We're really worried that this, if it's let to go the way that you mentioned at the beginning, which is to let them have the strike and lockout, I think it will have a huge impact, just like the port strike had last year in BC.
Moving to truck or opting to have your company's products shipped by truck is not a realistic option, is it?
Not practically. Our transportation system is pretty much at capacity anyway. Remember, a train, is the equivalent of hundreds of trucks. So, imagine trying to move those goods. And the other part is for large commodities, or for whether it's large machinery or ingredients, or even things like chlorine. These are not easily transportable on roads. So, it's really important for Canada to realize that our infrastructure, our trade infrastructure, industrial infrastructure is tight. It's quite fragile, and the unintended consequences of allowing a stoppage here is to affect the 1.9 million Canadians who work in manufacturing and the 30,000 companies that are part of our sector. This is something where I would say it goes beyond let's let the normal course of labor relations go ahead. We have nothing against negotiations, but in this particular case, I think the solution to allow our economy to keep functioning, especially in our export economy, is to force the parties to the table with an arbitrator, because in at least that case they are talking, but the system keeps working.
Would you be taking this position if it was only one railway that was looking at a potential stoppage and the other one had a contract in place or had resolved its issues with the union?
I think so, because remember, Canada is blessed with two national railways, not 20, not 30, or a couple hundred the way the U.S. has. So our sector depends on both of these systems. They they kind of crisscross and divide up the country. So, it's whether it's a port or a border crossing or a rail system, we have to make sure that we keep that trade infrastructure moving. And we've said for many years, these need to be considered. I'll use the word essential to our economy. Canada, we just have too much at stake. Canada is a trading economy. Our economy, domestic economy, is small, but our manufacturing sector has to be competitive, world-class size, which means we have to export, and which means especially because we trade so much with the U.S., 3/4 of everything we do goes to the U.S., we have to be able to move goods and parts and ingredients back and forth. So it's really important that we keep this trade infrastructure, and rail is an incredibly important part of that system.
I assume you and your association is talking to Ottawa. That's largely why your association would exist, I guess, to speak on behalf of your members. Are you able to characterize what kind of feedback you're getting from Ottawa?
Well, I think what you said at the beginning and what's been said publicly is that currently the government, their point of view is letting the parties negotiate. I just think at this point, it's gone on long enough. They've had months and months of negotiation. It's gone to the Canadian Industrial Relations Board. I think at this point, our recommendation is that for the good of the economy in every province, because we operate in every province in Canada as well, for the good of the economy across Canada and for the sector, that it's time to take that first step, which is force the parties to arbitration, and I think that will help prevent an economic downturn that we don't really need at this stage.
Dennis, thank